Welcome back to Bazaar Morning Call. It was a really good day yesterday. The Nifty, hung on to the 19,400 mark with ease. But do we build on to it today? That's the important bit. Our research team is standing by to give you the list of top 10 stocks, and there are plenty to talk about. Bajaj Finance is first on our list. Sudarshan is here to give you the latest on that. Sudarshan, over to you.
Yes, Bajaj Finance has announced the launch of its QIP, and for the same, as per SEBI formula, the floor price is fixed at rupees 7,533.81 per share. Now, coming to the total fundraise, company has a board approval to raise total rupees 10,000 crore, of which company has already announced issuing warrants to Bajaj Finserv of rupees 1,200 crore at a price of rupees 7,670 per share. Now, coming to the QIP part, the term sheet indicates company is looking to raise up to rupees 8,800 crore via QIP, and for the same, the indicative price is seen somewhere around rupees 7,250 per share, which will be at a discount of 4% to current market price. Now, coming to the details, if company manages to raise the entire amount of rupees 8,800 crore, this will lead to an equity dilution of nearly 2%. Tier 1 ratio will rise to 25%, whereas net worth will increase by 14%, and book value is seen rising by somewhere around 12%.
All right, thanks a lot for that, Sudarshan. Well, let's hop across to Sonal. She's here to tell us about HPCL. Sonal?
Good morning. Well, like other oil marketing companies, HPCL too has reported a beat on all parameters. Revenues have come in at 95,700 crore rupees, slightly lower than the poll, but EBITDA has come in at 8,217 crore rupees. Margins have come in at 8.6%, which compares with a poll of 5.2%, and profits, they have come in higher at 5,100 crore rupees. Now, this was not really a refining-led beat because GRMs are slightly lower than what the street was working with at $13.3 per barrel, but this number, of course, is higher on a YOY and on a quarter-on-quarter basis as well. So that is a good sign for the refining segment. Marketing sales, they were also up 3.4% on a YOY basis, but they declined 9.5% on a sequential basis. But EBITDA this time was way higher than what the street was working with. Jefferies has an underperformed rating with a target price of 225. They say that EBITDA ahead on higher inventory gains despite weaker refining margins this time, and that's why they've raised their FY24 EBITDA. However, second half for the entire universe is expected to be weaker, but for now, Q2 has been good for HPCL.
Thank you very much for that. Nykaa is a stock to watch. Yesterday closed up with a gain of 5%. Mangalam, how did the numbers look?
Well, Nykaa has been gaining ever since the company gave their second quarter update, and the numbers were strong as well. 22% jump is what the company reported in their revenues as projected by them. The EBITDA actually gained 32%, and this despite a decline of almost 350 basis points in their gross margins because of cost operating leverage. Net profits as a result of which on a low base increased by 50%. The internal details weren't bad either. Beauty and personal care grew 19%, fashion grew 32%. Fashion has been the growth driver for the company, and their others vertical, which includes the likes of Nykaa, Man, their B2B platform and the international business doubled on a low base. More loyal customers buying more things from Nykaa, and the second half of the company is seasonally stronger, so expect some green on Nykaa to continue after the big move that it saw yesterday.
Okay, and there was that big splash, right? Nykaa Land, first of its kind in the beauty business, did pretty well there. So Nykaa will, of course, be in focus today. But let's go across to Ekta. She's tracking Gland Pharma this morning. Ekta, over to you.
Thanks for that. Well, actually, not a bad set of numbers. The revenue was up 32%. The street was anticipating a 30% growth. Margins were better than expectations at 23.6%. Profit was lower because of a higher tax rate. Even Q-on-Q, the margins were stable at 23.6 versus 24%. Now, the US markets, which is around 54% of their sales, did well. So it was up 22% on a Q-on-Q basis. Their recent acquisition, Cenexi, recorded a negative EBITDA this quarter of around 26.8 crores because of a monthly shutdown. So there is expected to be recovery going forward. That impacted the rest of the world markets, which is down 9%. Europe was impacted because of that as well. It was up 12%, however, on a Q-on-Q basis. India, which is around 6% of their sales, did well. So it was up around 35% Q-on-Q. Brokerages are positive. Elara has an accumulate. They've raised their target price to 1764. Bernstein has an outperform. Target price 1724. According to them, sequential improvement as promised, and the base business was stable with upside from new launches.
Okay, all right, Ekta, thanks for that. Well, Mangalam, coming across to you, tell us about Emami and TVS supply chain.
Well, we start with Emami, where, it's no different from all the other FMCG companies. Macro conditions impacted their top line. The domestic volume growth was just about 2%. But from an Emami standpoint, is the first positive volume growth that the company has reported in the last 5 quarters. And the net profit was impacted by higher other income in the base. Strong in, their EBITDA. The company's gross margins improved by 350 basis points. The EBITDA margins also improved with a 20% jump in their EBITDA. Domestic business, while it grew by 4%, the key trigger to watch for them will be how their winter portfolio pans out and the scaling of their D2C verticals too. For TVS supply, the revenues were down 15%. The operational performance was good. Margins improved by 200 basis points. And that's largely because of their supply chain business, one half of their business showing strong growth on the revenue and the operational front, whereas the weakness was led by their network solutions business, where we saw a decline in both revenues and operational profits year on year. So see some mild red on TVS supply chain.
Okay, thank you very much for that. Moving on to Honeywell Automation. Upasana joins in with the details of the results. Upasana.
Well, Honeywell Automation has reported its Q2 FY24 numbers, and we are seeing a strong revenue growth of 39% at 1,104 crores. While talking about the total expenses, it has seen an uptick of almost 44% on YoY basis, and it stood at 980 crores. Well, the rise in expenses have clearly outpaced the revenue growth, and this is the trend that we've been seeing in the past 3 quarters. Coming to the EBITDA margins of the company, they saw a downtick of almost 360 basis points at 12.5% versus 16.1%. While talking about the PAT growth, it remained marginal at 3.4%. at 122 crores despite the strong revenue growth. Well, PAT growth remained dented due to high cost of materials and fall in the other income. So all in all, we are seeing a weak set of numbers coming from Honeywell Automation.
Thanks a lot for that, Upasana. Well, let's wind this down with Surabhi. She's here to tell us about some more earnings. Surabhi?
So first on my radar is Kabel. This is the first earnings after they listed. So revenues were up 18%, EBITDA was up 88%. That is because of a gross profit margin expansion of 250 basis points. EBITDA margin expanded by nearly 300 basis points, and PAT margins expanded by 200 basis points. Strong revenues in the wires and cable segment that grew 19%, and margins in that segment were up 200 basis points. Radico Khaitan in a good set of numbers, revenues up nearly 22%, gross profit margin saw an expansion of nearly 200 basis points, EBITDA up 35%, margins at 13% versus 12%. And their premium segment that did well. Over there, the volumes were up 22%, and the revenues in that segment were up 36% on a year-on-year basis. PG Electroplast, again, a very strong set of numbers. Revenues up 40%. EBITDA nearly doubled at 38 crores versus 19 crores same time last year. Gross profit margin expansion of 110 basis points. EBITDA margin expansion of nearly 250 basis points.
Okay, thanks a lot for that. Well, here's a quick recap of our stocks in the news. Stocks with positive news flow. There's Bajaj Finance, HPCL, Nykaa, Gland Pharma, Emami, Kabel, Radico Khaitan and PG Electroplast. While stocks with negative news for today, there's Honeywell Automation and TVS Supply Chain.